what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year.
Hey, good morning, everybody. Happy Tuesday. Welcome to the morning show. It's the best morning show in finance here on Stock Market TV. Spencer Israel, JC Parets is back. Steve Strazza is here as well. That's the deal. We got the full gang back together. What are we talking about today? S&P 500, more like Mess NP 500. Hey-o! All right, I'll be here all week. What else was on our radar? We're talking. Let's see. We're watching NVIDIA. I'm watching Zoom. They had earnings last night. A few retailers on my radar as well. What else are we watching? I'm looking through the charts here. Strazza was just mentioning uranium. We might talk about some uranium stocks. Hey, you guys seen Moderna lately? Good a week for Moderna. When's the last time you could say that? All right. Guest today, Willie Delwiche from High Mount Research will be on in about 20 or so minutes. So save your questions for him. Good morning, chat. What's up? Let's go. It's the morning show.
All right. Can I just tell you how much I enjoy New England in the summertime, Mr. Strazza?
Hey now. I do too. How was your trip to the greater Boston area?
Let me tell you something. Massachusetts, from the months of August through October,
It's great.
there's something about it. I absolutely love it. The Berkshires, not that I went to the Berkshires, but the Berkshires in the back half of October.
Yeah, crazy.
It just makes me so happy. It just makes me want to listen to James Taylor. It feels like I'm in a James Taylor song. You know what I mean?
And I have a probably not so hot take. The further north you go, the better it is that time of year too. As nice as Connecticut and New York are, the further up you go up to Massachusetts, keep going to New Hampshire. It's beautiful up there.
I agree. Portsmouth. I love New England things. New England things in the summer make me very, very happy. I got to do that for a few days. First family trip took 3 kids in one car, and 2 infants and a 3-year-old on a 6-hour drive. And I'm still alive.
Three kids, a wife, and a Thule.
What a great thing with Thule.
Was this your first?
I love it.
Is this your first family trip as a fivesome?
We'd go to the beach. The beach is like a couple hours away, so no big deal. We didn't even need a Thule. In hindsight, I wish I had one. But listen, it's good to be back. Shout out Massachusetts from August to October. The rest of the year, you can have it. But August to October, that's when I like them most.
I'm with you. Yep.
Yeah. But I look at a lot of charts. People are like, oh, JC, you're on vacation. Leave the laptop alone. I like looking at charts. First of all, it's not a vacation. It's a trip. When you go with 3 kids, it's not hardly a vacation. But nevertheless, I enjoy it. What's wrong with that?
You could fit a lot of charts in that big Thule.
Don't chart and drive. How many times we have to have this
charting and driving. Nobody's charting and driving. I am putting kids to sleep and then doing my charting.
Okay.
Right? Or get up before the kids, do some charting. I enjoy it. Like, some people like to read the newspaper. Like, there's people who actually still do that. I never understood that. I'd rather see what's actually going on instead of playing telephone with a bunch of journalists telling me their interpretation of what's going on. I'd rather just see for myself. I don't get it.
We have something on this point today.
Do we?
Mm-hmm.
Well, shall we? Shall we get into it?
You want to jump right into it, Spencer?
I think we should.
All right.
We should.
Let's jump right into it.
First of all, Spencer with the jokes this morning. S&P 500 more like Mess MP 500. Look at this guy, huh? Spencer with the jokes.
Keep doing what you're doing, Spencer.
Keep doing what the people like it. The people appreciate it. We give you a lot of shit, but that's just kind of how we roll around here, right? Spencer, why don't you speak?
Appreciate that.
Can you throw up the damn chart?
Appreciate that.
This ugly piece of shit. This thing is a mess. This is a messy mess, right? Stuck below overhead supply, above underneath demand, former resistance turning into support, former resistance, still resistance. Like, this is just a mess. So I think it just reiterates something that I learned from Jeff DeGraff many years ago, and our colleague and partner here, Sean McLaughlin, has always reiterated the same thing. And that is the following. Very simply, the first thing that we want to do is identify what type of market environment are we in. And then decide which tools and strategies are best for that environment. As opposed to a lot of mistakes that investors make is that they just decide what strategy they like. Usually the strategy that worked in the more recent cycle, because they're just not mentally strong enough to get over their recency bias, and that's just human nature. And they just incorporate whatever strategy they think always works into the market no matter what, as opposed to adapting to the circumstances that the market is providing and essentially playing the cards that were dealt. A lot of investors like to pretend they have pocket aces when they're holding the whip, right? And they're just going to lose every time, right? Play the cards we're dealt, right, Strazza? Am I crazy here?
You know, I'm with you.
I do know that. I do know that. So Jeff DeGraff taught me that many years ago. But then Sean, on top of that, Sean and I had been friends for a long time. Sean's been working here longer than you have. Is that right?
Slightly longer. Yeah.
Slightly longer. And that's something he's always incorporated to in his own way. And I've sort of really absorbed that. And it's basically that same strategy, but from a volatility standpoint. But it's the same idea in high volatility environments. You incorporate the strategies that are better for high volatility environments, and low volatility environments, you incorporate strategies that are better for low volatility environments. Like, hello, duh, right? So like once you kind of like come to the realization that is the better way to approach markets, playing the cards that were dealt instead of pretending we have these cards when we have something completely different, right? You could trade the market you wish you were in. You could trade the market that you think we should be in. I find it way easier to just take advantage of the market that we're actually in, right? You see what I'm saying, Strazza?
The batteries in my mouse just died, man.
Strazza, having technical ever since you got back from Asia, you just can't get your shit together.
Yeah, of course it would happen during like the 1 hour and a half of my day where I'm on camera, right?
Well, usually you're on camera longer than that throughout the day, but that's another story. The bottom line is nobody cares about your strategy. Nobody cares about my strategy, just to be clear, right? Nobody cares. The market is going to be different every cycle, right? It's not that this time it's different. Every time is different, right? You can say, this one reminds me of that old market, but the truth is there's a lot of things that are different, right?
I mean, you don't, if you're Bill Belichick, right, you don't go into every game calling the same plays. You call different plays against different defenses.
Look at this guy with the sports analogies heading into football season. Look at you.
Should I share that one with Todd Sohn? I know he'll steal it from me.
Oh, that is a very Todd Sohnism. Yeah. That is a Sohnism. I don't know. I'd keep it for yourself. And then let's throw the seasonality chart just to reiterate that the market is a mess during a period of time that it's supposed to be a mess, right? Over the last 3 quarters, stocks did great. Record returns. Best first 6 months of the year in the history of the NASDAQ. Ever since the midterm election years last year, stocks are supposed to do well. Guess what? Stocks did great. I don't know what everyone's so surprised about. And now stocks are supposed to be a mess. And guess what? Stocks are a mess, right? So like my question is, when is the market going to stop behaving exactly as it should from a seasonality standpoint? When is that going to stop? Is it going to stop tomorrow? Is it going to stop next quarter? I don't know. Right? But the market is doing exactly what it's supposed to be doing and continues to do so. Like, it's not like anything new. So like when people are surprised that the market is doing what it's doing, if anything, we should be surprised if it wasn't doing that, right? Like the market is doing exactly what it's supposed to be doing. If it was doing anything else over the last year, that would be incredibly, incredibly unusual. Right?
Wait.
How do you see it, Mr. Spencer?
Well, no, my question, JC, is like seasonality. I've always thought it to me it's like a very convenient scapegoat. It's not the best word, but yeah, scapegoat. It's a very convenient justification, right? Like when it works, yeah, seasonality. But when it doesn't, it's oh well,
No,
like
I don't know. That's not oh well. When the market ignores seasonal tendencies, that's the signal, right? When the market behaves according to what it's supposed to be doing, there's no signal. It's just perfectly normal market behavior. And by the way, it's not that it's convenient that this year it's trading alongside. It's been that way the entire cycle, right? And we're almost done with the third year of the cycle here. So this has been going on for quite some time. And again, it's not like, oh, it worked, great. Oh, it didn't work. Oh, well. No. It's been trading according to seasonal trends, like to a T. If it wasn't, that would be unusual, and that would be the signal. For example, the best 3-month period of the year should be from November through January, right? If the stock market struggles from November to January, that's the signal. That means there's probably something wrong underneath the surface because the market is ignoring those seasonal tendencies, right? Let's say in this period right now, let's say the market wasn't a mess. Let's say the market just ripped higher throughout July, August, September, October, just ripped higher. That would be unusual. That would be the signal. You see what I'm saying, Spencer?
Yeah. I see what you're saying. I guess that my thing is you're using it as more as a signal, and I've always thought of it as more of like a justification for what's happening today, whereas you're using it for the future, and I'm just using it to justify what happened yesterday, right? Which maybe is not the right way to think about it, but that's how I've always thought about seasonality.
It's like part of identifying the market, right? We talk about how we want to incorporate some strategies in certain environments and other strategies in others, right? From a seasonality standpoint, the market's supposed to be a mess. So let's look at the market. Is it a mess? Yes, right? Very much so. So there's no signal. Like there's nothing unusual happening here. All of this is perfectly normal. And throw up slide 4. Actually, you could throw up slide 3 just to zoom in on the seasonality. This is just this year, right? So literally, the blue is what the market does historically in pre-election years, and in red is what the market is actually doing, right? So perfectly normal market behavior here. And this is going to continue to be the case until slide 4 here, which is the technology index, until it ultimately breaks out, if it's going to break out, right? If technology, which represents almost a third of the entire S&P 500, represents over half of the NASDAQ 100, if technology is stuck below the highs from the prior cycle, it ain't going anywhere. And if tech ain't going anywhere, S&Ps and NASDAQ aren't going anywhere either, right? I mean, that's just what it is. So the other day I was on a Twitter Spaces, and the host asked me, JC, S&P 4,400, 4,750, blah, blah, blah. He starts giving me all these numbers. I'm like, I think you're missing the entire point. It's not about these individual levels in the S&P 500 and more about what's going to be driving the indexes higher or lower. When you look at the largest component by far, stuck below overhead supply and struggling, the indexes are going to struggle as long as this remains the case, right? As long as this is the case, these indexes are going to struggle. So this is front and center. So if you're worried about where the S&P 500 is going, I would look at that. And then finally,
hold on. Isn't this just the reality of our life in 2023? As tech goes, so goes everything. In a way, right? I mean,
not everything. The indexes, right? I continue to believe, and I've been saying this for months now, I continue to believe that there's going to be huge winners underneath the surface that aren't going to make a dent in the S&P 500. I'm talking specifically about the indexes.
Right, sure. But also, like, yes, it's certainly possible that tech can rip higher, and so can energy, right? And so can utilities or whatever. Sure. Yeah, that's totally fine. But technology will drive the overall sentiment, right? That's what you're saying too. With
it drives the indexes and it drives sentiment. Agreed.
Yes. Yeah, and that's
especially and some polls more than others. If you look at the NAAIM, which is active investment managers, it trades tick for tick with growth and tech. Of all the sentiment polls, that's the one that is so.
And that's just the way. That's just the way it is right now. So okay, what do you want? You wanted this one?
Yeah, throw in the yields. I don't know. I just think I'm curious. I'm looking forward to Willie coming on here. Willie is my my Fed whisperer, my interest rate consigliere, if you will. Right? Willie's one of those guys that brings a unique perspective that's different than mine and different than Strazza. So I always like to hear Willie. I've known Willie for a long time. Really good at what he does. I'm curious to hear what he has to say here. New highs in the 10-year yield as the twos, sort of roll over or fail to make any progress. Now let's see if they can play a little catch up today. But this is what I got. This is an interesting one, man. I don't know. Everybody just assumes that rates are going to go higher, and maybe they do. I really don't care. I got a tiny little bond position. I'm looking to add to some, right? I bought it here live on air on Friday. Nothing that's going to change my life, but maybe I will put on a position that might change my life. I've actually had bond trades in the past that did in fact change my life. So maybe this is one of those. Strazza, any thoughts here?
I don't think everyone is assuming that interest rates go higher. I think
a lot of people are.
I think the weight of the evidence is very much suggesting that right now. You could point to a couple things like, logical support levels in bonds or commercial positioning or speculative positioning rather. But outside of that, if you look at just the price action, yields are resolving these ranges higher.
I guess we'll see now, won't we?
I'm just saying.
I think sentiment's a little stretched. I think it's a little stretched.
We know sentiment's stretched just based on our COT data.
And then take a look at the 30s and 10s. So this is as of this is not including yesterday's data. What does it do? We're looking at a weekly time frame. So these are weekly closing prices on those candlesticks, and we're back to those former highs. The most bullish thing for bonds, in my opinion, would be for rates to break out here. All the journalists get all excited because this sort of thing helps keep journalists employed, which I'm all for the record. And they get all excited. Mom and pop and my grandmother calls me that interest rates are going higher. All that happens. You throw in a magazine cover, and then you get the reversal intra-week, and rates completely fall apart, and bonds rip in everybody's face. Like that, for me, would be a nice opportunity. That would be a nice opportunity, and that's sort of what I'm looking for. And if that doesn't happen, and there's no trade, then so be it. Let interest rates go to 10%. I don't care. Right? Like that's the beauty of the market. I really don't care at all. Right? Rate 10s could go to 10%. They can go to 0%. They can go back negative. Doesn't matter to me at all. But I like to sort of, which is part of the reason that we leave that space, Strazza, in between the latest price and the y-axis. I always like to leave that space. Sometimes you see charts where the price is all the way up against the y-axis. Like, relax. Some breathing room. Some personal space, as they say. So I like to leave that so that we can visualize certain possibilities, because us as humans, not to get all into science, but Strazza, we have a huge advantage as Homo sapiens that we have the ability to think about things that have not occurred yet. Think about things that don't exist. Think about the future. Other species don't have that ability. It's one of the reasons that we have survived so long and why we're the winners. So as investors, shouldn't we take advantage of that superpower that perhaps a chimpanzee cannot, or maybe a zebra is not able to do that?
Sapiens, shout out.
Shout out, Sapiens.
Yeah, man. And we do, right? Every day. And I think that's a great reminder. And also the top of the screen is not resistance, right? Pull your charts off your axes.
Pinch your y-axis like a gentleman. Give it a little pinch, Pinch the y-axis, right?
Hey,
don't forget.
Speaking of
Spencer, are you pinching your y-axis these days? I feel like you're not.
No, I'm not. I'm distracted. Speaking of other species, did you hear about that spotless giraffe that was born?
What, dude?
Incredibly rare at a zoo. I saw this morning. A giraffe with no spots was born in Tennessee. It's extremely rare.
And it's not a giraffe.
It's extremely rare. No, it is a giraffe. What do you mean? A giraffe gave birth to it. Of course, it's a giraffe.
Yeah, it's a giraffe.
Probably not a giraffe.
Extremely
maybe the giraffe was getting freaky with a different kind of animal. I don't know. I don't think it works that way, right?
I don't know how it works.
Yeah. I'm not good at like animal births. I'm pretty good at childbirth after having 3. Like I'm kind of an expert now.
That's good. Okay. I actually witnessed like a goat birth when I was in first grade. It was traumatizing. Okay. Anyway, Willie will be on in a second. Before we get him on, you want to talk about what other charts do we have here? There's a few interesting earnings if you want to get into that.
Yeah, do it. Hit it.
Dick's Sporting Goods is getting.
What time's Willie coming in? Today. Willie's coming in at 9.
Should be right about now. Actually, I'll shoot him a reminder. But
Dick's is getting crushed out here today.
Yes, it is. If one of you can pick up a chart real fast, if not, I'll bring up a live chart. But yeah, it's not good.
So Dick's Sporting Goods is running into resistance at those former highs. I can't believe it.
You know, they've been one of the better retailers to be in the past year or so.
I'll give you one guess. They blamed shrinkage. Yes.
Yeah. So this is what I'm talking about. You get
Hold on. Can you explain to me? Because when I think of shrinkage, I think about something else. Can you explain to me what they mean? I'm pretty sure we're talking about two different
This is
shrinkages.
that same theme that I keep mentioning in these retail earnings. It's if you pay enough attention to these earnings, you pick up on themes, and they all copy each other. Whether it's the strong dollar is hurting us or shrinkage, people are stealing things, and then they like.
Come on, can you explain what shrinkage is? By the way, throw slide 1 there, Spencer.
It's stealing, it's theft.
Shrink it. Why don't they call it that? Why do they call it shrinkage?
Because they need an accounting word for it to confuse people.
Oh, true.
People taking things from warehouses and trucks and things like
the old FASB, right there, Strazza?
Old FASB, yeah. But look, I mean,
it's failing where it failed before, just like technology. What's everybody so surprised about?
Because it's been a leader. You know, this one's been really good. Results have been coming in hot consistently for the past few years. I thought this thing was going to break out.
Okay, but it didn't.
Yeah,
that's why we wait for breakouts. By the way, FYI.
Sure. Definitely.
Right? In case you were wondering why we wait for breakouts, Exhibit A.
Throw up. All right. I think this is a nice pivot to a Acushnet.
By the way, how do people steal at Dick's? Like, what are you going to walk out with a tennis racket? Like golf clubs? Like, what are you going to do? That's bullshit. I agree. Who said it's BS? Adam Evans says it's BS. Poor execution. I agree. I was just at a Dick's the other day. I've been spending a lot of time at Dick's lately, actually.
So you bought a lot of good stuff too.
I did. I showed you the picture, right?
Yeah. But listen, it's not that it's bullshit. It's that we don't need to hear about this on your earnings call. This is just ordinary course of business stuff. Unless you're going to tell me like stuff's going crazy in San Francisco and they're stealing things at 2 or 3x the rate that's usual, fine. Other than that, it's just theft. Like
the fact that they keep using this excuse, people are stealing our stuff. You're so full of shit.
Yeah, it's ridiculous. But it's been a thing. It's been an earnings trend for several quarters now. We'll keep an eye on it.
I do live in a good Dick's neighborhood.
A good Dick's neighborhood? That's okay.
Oh yeah. We got good Dick's here.
Not even going to read into that comment at all.
It's next to the Lowe's.
Okay.
When I do dad things, that's where I go.
Spencer, what are you signaling at? You're muted.
Spencer's on mute. Spencer, you're on mute, buddy. You've been on mute for some time. We lost you. Yeah, you're gone.
He's using sign language. You're on.
Nobody's heard you for a while. Nope,
no
you're
one
gone.
hears you.
Yep, you're gone. Come on, Spencer. Look at this guy. Is this your first? No, you're still gone. Is this your first time, Spencer? First timer? Look at this. I go to Massachusetts for 3 days, and our host is gone. See that? Oh well. So anyway, speaking of Dick's, I don't. In a similar way to how we want to approach the market environment for what it is and play the cards that were dealt, is there any logical reason to own Dick's below overhead supply? That's like owning technology over the last month or so. Like, why would you do that to yourself, right?
Listen, if you're going to own a retailer, Dick's wasn't a bad one to own. It's been strong.
Am I back?
He is.
All right. I have no idea what that was. I was trying to signal to move away from this so I can bring Willie on, but you guys weren't hearing what I was saying. So
hold on.
Weird.
So Dick's, their revenue breakdown is 25%
steal. I don't understand how much people could possibly steal to affect them that much. Well, the stock's down 20%.
That's the question, JC, right?
They're full of shit.
It's not. It's just growth is slowing, and it was a bad quarter.
They're liars.
Yeah, Wall Street.
They're lying, and the market is penalizing them for lying. Instead of just saying the truth, be like, sorry, guys, we sucked this quarter. All right. That's more respectable. We're stealing our stuff. No one's stealing anything, dude.
All right. Can we do one more retailer quick? What time is
now? Can we bring Willie on now?
Bring Willie on now. We'll get back to it afterwards. I want to talk to Willie.
Yeah. All right.
We could sit here talking about retailers all day.
I know.
Yeah, I could.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Willie boy.
Hey guys, how's it going?
Going?
Oh, just doing a little morning show. No big deal. No big deal.
Yeah. Caught up in an awkwardly named retailer there. I hear you were really doing some double entendre stuff there. So congratulations with that.
How often are you at Dick's these days? Your kids are older now.
Yeah, my son is active in sports, so I'm there more than I'd like to be. So,
does anybody remember Sports Authority? Whatever happened to Sports Authority? Did that become Dick's? Because it's kind of the same thing, right?
They're dead, man.
They've been dead, right?
R.I.P.
Over a decade.
Were they publicly traded?
Yeah. Yes.
I feel like Willie's the oldest one. I feel like Willie would know. What happened to Sports Authority?
I have no idea.
I thought it was.
Willie, what's the local paper? The Milwaukee Gazette? What is it?
The Journal Sentinel.
The Journal Sentinel.
Yep.
Have they mentioned interest rates at all recently? Because you know how much I like it when.
Yeah, that's a good question, JC. That's good memory. I've not noticed it as a frontline banner headline yet. That's for sure.
Be sure to tweet it out when it does.
I will do that. But
I'm sure you will.
Though the one caveat is they're now owned by USA Today, so it's not truly the local flavor that it used to be. So,
but still, if it's on the cover of the USA Today, it's similar information. So maybe we get a double here.
Hasn't that been a big trend in publishing for some time now, though, where the majors are just swallowing up these local papers that wouldn't have been able to make it without them anyway?
Yeah. Oh yeah. Yeah. That's been going on for a while.
I want to toss this question out to Willie, JC, because this is exactly what we wanted to talk to him about. We got a really good question in the chat. Willie, before you came on, I don't know if you were listening, but JC and I were going back and forth between, the charts are saying one thing in the bond market right now, and then positioning and sentiment is saying another thing. Billy Cunningham asked JC, how do you decide when to follow the charts? Rates are breaking out. Or look at positioning, as you say, the dumb money is super one-sided. So
first of all, the positioning is in the charts too. I don't know if you forgot that part. So you're always following the charts.
Right. So, but it's not price. He's saying, how do you know when to look at price and
trend versus sentiment? Trend versus sentiment.
Yeah, I mean that's that's a big, long-term, lengthy question. I think you have to weigh both of them. I think generally positioning gives you a clue about what might happen. The trend, the price action tells you what is happening. And so sentiment or positioning gives you a hint of what lies ahead, but ultimately I think you need to pay attention to what's happening, whether it's price or we could think about it from a stock market perspective. Breadth, that also is a measure of what's happening. But I think we need to balance where do we think we might go against where are we going or what are we actually seeing?
Where are we going, Willie? Can you just tell me? Can you just make it easy on me? Just tell me where we're going.
He's speaking before he goes, he's speaking to the concept of confirmation, right? So while we'll look at all these sentiment things, then we'll always look back to price to confirm them, right? So we can anticipate some sort of a trend shift here, but until we see it from price, that sentiment data, we don't want to overweigh.
Right. And you could expand that and go from a macro perspective, and that gives you a sense of what might lay ahead. Valuations give you a sense of what might lay ahead, but ultimately those are possibilities or chances. It's not actually what is happening, and ultimately we're investing in what is happening, not what might happen.
God damn it, Willie, are we buying bonds or not?
I would not. I think they're breaking. Yields are breaking higher.
Not yet.
Or not actually, ever. And I will correct that and add the caveat. Short-term bonds, yeah, I would load up on those.
Bills,
I think
just get paid.
Yeah, I think that is the most attractive area of the market right now.
What is
long-term
bills?
Short-term bonds. I was just having a conversation earlier this week about long time bond managers I've heard for years talking about yields can't go higher, yields can't go higher, yields can't go higher, and yet the price action suggests yes, they have been going higher, they can go higher. So I think we're in a kind of a paradigm shift in terms of bonds right now, and so expecting higher yields over a longer time period, I think, is something that investors aren't prepared for.
Do you think that growth stocks weren't prepared for it either? Because just the last couple weeks of selling, maybe the past month, something like the NASDAQ or tech, it's almost like they just got the memo that rates are going higher. Like they didn't believe it until
then. Yeah. Well, right. I think in deeply embedded in the market, whether we're looking from a bond perspective or a stock market perspective, is this idea that yields are still in that secular downtrend, and that any uptick in yields is a short-term phenomenon that is likely to quickly be reversed. That was a pattern from the early 80s, up until a couple years ago. So there's a reason that the market thinks that, but at the same time, the evidence increasingly suggests that that's shifted and we're not in that environment anymore.
So based on sentiment and positioning, risk assets could be in for significant repricing based on changing expectations for yields.
Yeah, I think so. I think the market, the bond market, the equity market has not caught up to the idea that yields are going to not even soar from here, but just stay higher. I think that's the big thing that people need to catch on to. It's not that environment where you had a brief upswinging yields and then sustained lower. I think it's just stay around here for a while. That weighs on on equity markets as much as that relentless rise.
I think a lot of these long duration equities were literally pricing in a downside resolution of these ranges in yields. And now
that was the strength you saw in tech in the first half of the year.
I think so. And now that we're getting what seems to be an upside resolution, they're like, oh shit. And we're seeing a lot of volatility because of it.
Yeah, I think that's exactly right. I don't know who said it, but that idea that the carrying cost of crazy is no longer zero. So there's a lot of money went into tech because it was cheap to finance some of these ideas. Yeah. It's no longer cheap to do that, and so there is this repricing that's taking place.
All right, what else we got? What else?
I want to talk about home construction. Can you throw up slide 1 there, Spencer?
Housing data.
Yeah, we got Willie here, so I'm not asking Willie about pot stocks, or altcoins. I know who we're talking to here.
Spoiler alert: another big insider buy in Lennar today.
Hey, easy. Wait till the hot corner. I know you get excited over this. Wait till the hot corner.
I love it when they buy strength.
Willie. So here we're looking at the ITB and the XHB. Very different composition. The XHB, the quote unquote home builders ETF, barely has any actual home builders in them. And they're struggling failing to break out above the prior cycle's highs. ITB, on the other hand, which is home construction, actually does have a lot of big home builders. In fact, 15% is DR Horton, 12% is Lennar, then NVR, then Pulte. I feel like the XHB doesn't have any of these companies in it or any relevant positioning. What are you thinking here, my man?
I'm thinking that the housing market is in a unique spot. For as expensive as it's gotten, it's still supply constrained, and the only way that you get out of that box is to build new houses, and that's what you're seeing. You're seeing in the housing data. You're seeing it in the price part of the housing data, and you're seeing in home construction. And so builders can build, and people are still buying those houses. So it's expensive, more expensive now than it used to be, but there's still, I think, some longer term demand that needs to be satisfied there. And so far it hasn't been.
Because Willie, if you own a house and your mortgage, you're locked in at 2 or 3% or 4 or whatever, and your house is worth more, if you sell it and now you got to get a mortgage at 8%, right? You're not going to do that, right? Is that
right?
Like, is this just too much common sense, or do you think that's actually what's happening?
That is exactly what's happening, and that's a benefit. I mean, we could think about this globally. That's a benefit that the U.S. has versus some of the, I think, Canada, Australia is this way, where you don't have those long-term mortgages, and so there is that refinancing that needs to take place. We don't have that in the US. You get a long-term mortgage, you're locked in. You're going to be, because of the increase in price and the increase in financing costs, you're going to be loath to sell your house and move somewhere because you're going to get less house and it's going to cost you way more than where you are right now. So you could think about that from a long-term perspective for the economy. It's going to be a, when did you buy your house kind of, bifurcation in the economy, I think.
Right.
If you bought at a low price and got a low mortgage, you're going to be in a vastly better spot than if you're out there trying to buy a house right now with mortgage rates above 7%.
That's why they're building so many new ones.
Exactly. Yep.
All right. So these are the
existing
things,
homes won't be on the market.
I'm thinking about. I'm thinking about homies. I'm thinking about rates. What are you thinking about? I know you're a thinking man, Willie. You're a thinker.
I am thinking that, and it goes to rates. And we were talking about before that the market has not caught up to the shift that we are coming out of this secular decline in yields. We're reading about. We'll hear more about this idea of R star, that this neutral rate. Interest rate, it's been trending lower for years. I think it's going to start to trend higher. And so the market needs to catch up to that. And whether we're thinking about bonds or we're thinking about equities, it really gets back to what's the cost in the market, and that's rates. And if that's rising, that's a different environment than we've been in the past. And it doesn't mean things need to be a disaster, but it's a different environment than we've been in the past.
And what about commodities? If interest rates are going higher, like you say, because you're here guaranteeing that interest rates are going higher, right? That's guarantee.
Oh yeah, guarantee.
If rates are heading higher, oil's going to 100 at least, right?
I think commodities will be a good place to be. You don't really see it in the price action at this point. But this gets back to what we were talking about before, the anticipation of what may lie ahead versus what you're actually seeing. I can expect commodities will improve. Is it time to load up on them right now? No, I'd like to see confirmation from a price perspective, but I think we will end up seeing that.
What about these metals, man? Precious, base, anything or not?
I mean, gold has looked like it's wanted to go for a while, and it hasn't broken down, but it hasn't gone anywhere. So
yeah.
I don't know.
The real yield. It's the real yields, Willie, isn't it?
Yeah.
Higher real yields. Gold ain't going anywhere, man.
Exactly. That is exactly right. And as inflation comes down and yields move higher, that makes it a headwind for gold. I don't know that that's really where you want to look to park your money in an environment where short-term yields are 5%. I'd take cash over gold at this point. But that's just me.
And you, Willie, and I have been you and I have been going back and forth for years about overthinking the U.S. dollar, because I love overthinking the U.S. dollar, and you hate overthinking the U.S. dollar. So let's overthink it for a minute. We're not overthinking it. It's just math. The negative correlation between the dollar and equities has been very strong for a long time. So there's no real argument there. Stronger dollar is going to keep pressure on equities, Willie?
I mean, that's what we're seeing. I mean, dollars picked up, and what have we seen since the beginning of August? We had 91% of global markets above their 50-day average. This morning, we're at 12%. So we've seen that. The caveat to that is that if you price it in local currencies, you've still seen that weakness. And so it's not just a straight dollar correlation. There's still probably some dollar impact on a local currency basis, but yeah, the dollar going higher probably isn't at least on a short-term perspective, isn't a good thing for equities. And that's what we've seen. Probably we continue to see that if that's what you want to look at. But I think what you're seeing from a dollar perspective is reflected also in bonds. And so that's where I would focus more from the bond market.
What about these yield curves, Willie? You know how the kids love talking about their yield curves. The yield curve, are we getting back uninverting? Is that how to say it? Disinverting, uninverting?
Yeah, disinverting.
Reverting.
Reverting. It's I think the assumption was that you have an inversion, and what happens is that the short end has to come down to the long end. What we're seeing right now is this disinverting, this reverting is happening because the long end is, in terms of yields, is catching up to the short end.
Can you throw up? Can you throw up slide 7 there, Mr. Israel? Is this what you mean here, Willie? Is this what you're talking about? Because you know me, I like to visualize thing in chart form, right?
Exactly. Well, except now over the last few days, now the 2 years starting to turn higher again. 2 years above 5%. And so it's turned higher, but it is that long end is catching up. And it is less. There's less of a spread than there used to be.
But does that mean that the stock market's going to crash? This inversion, reinversion?
If you choose to believe that, yes. I think there's other reasons for concern, not strictly this, but either way, I think we have yields moving higher over time, both of the short end and the long end, and the long end's catching up to the short end.
All right. So what are we buying here? We're halfway done through Q3, which is crazy, right? I mean, this is insane, right? We're literally it's football season again. I mean, I'm happy about that, but man, time flies when you're having a good time. You know, as investors, you know, I can't think too far ahead. Like I can't worry about next year. Like I don't know what I don't even know what I'm having for dinner yet alone what the market's going to be doing next year. I'll worry about next year. Also, you know, we do some day trading around here and things like that, but from the majority of my portfolio, I really don't care what happens today or yesterday for that matter. I'm kind of in that intermediate. I'm thinking out weeks and months. You know, that's my time frame. So what do we got? 4 months left in the year? How's my math? Is that right? Yeah, 4 months left in the year. That's sort of where I live. What are we buying, Willie?
The strongest areas of the market right now, from a kind of a shorter term relative strength perspective, you see it in energy, OIH, oil services. You see it in PAVE, PAVE, the infrastructure ETF.
Yeah.
COWS, COWZ, the free cash flow ETF.
Hold on. What was that last one?
Cows. Cash cows.
Cash cows, COWZ.
Oh, COWZ. Yeah, I know that one.
What kind of stocks are in there, Willie?
Mid cap value, mostly, I think, and a lot of energy.
It's just like fortress balance sheet, like high operating cash businesses.
Yeah, it's high cash flow.
All right.
It's an energy ETF, Strazza.
Yeah,
it's Marathon
it is.
Petroleum, Nucor,
It's got a lot.
EOG
It's got a lot of energy in it.
Valero, Conoco, Phillips. These are the largest components.
Well, that's pretty cool because I'll bet you it's not always a heavy energy ETF, right?
I mean, it's 37% energy.
Right. I'm saying in down cycles for energy, when they're not throwing off cash flows, I'm sure they're going and finding other names to invest in that are not energy at all. So that's pretty cool.
13% materials, 7% tech. No utility.
Well, I mean there's your it might just be as simple as your energy versus tech trade that, you know, we talked a lot about last year. You know, after a generation of have as much tech and as little energy as you want, last year we started to see that reversal. You wanted more energy and less tech. Reverted a little bit early this year. Now it's starting to come back into focus again. More energy, less tech. Most investors are way overweight tech, way underweight energy. And so if you're going against the crowd, having a little more energy and a little less tech is probably a way to do it.
What's the most bullish chart to argue for a continued uptrend in energy right now? What would you point to?
Rates.
Yeah, I mean, there's nothing that comes to mind. Just
Crude futures,
that
rates.
energy has to go up. It's underowned. It's historically underowned, probably.
3% of the Dow, 4% of the S&P, 0% of the NASDAQ.
When I look at the price structure in something like XLE, we had a huge run off the COVID lows, straight line higher, massive gains, and just straight sideways. You know, pretty standard consolidation. Market's digesting those gains since, you know, middle of last year. So if you zoom out enough, it looks like up, sideways, and why not up again if this range resolves?
Yeah.
Yeah.
100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100 Yeah, well, I mean, you could look at that. You could look at the S&P the same way. I mean, we're, you know, unchanged over the past 2 years, trading this August basically where we were last August. So, yeah, you had that move off the COVID lows, and now it's been a roller coaster for 2 years, but I mean, we're right back to where we started, like within 0.1%.
We were literally
over the
here
past 2 years
in August of 2021.
Yes, exactly. That's the point. And so,
Willie, before we let go of Willie, can we talk about sell side analyst revisions before you run?
Sure. Yeah.
You know how the way I look at it is kind of like Sonic the Hedgehog. You know, when the little wolf or the little fox used to chase Sonic the Hedgehog. You know what I'm talking about? Obviously, Willie's got a couple of years on me, so you definitely played a lot of Sonic the Hedgehog. But kind of like that little thing the little furry thing would follow around. It's kind of like the sell side revisions following prices. Can you touch on what you're seeing there?
Yeah. So what's actually interesting is that as price volatility has picked up in August, earnings revisions have actually continued to drift higher. So, I've got concerns from a breadth perspective, and seeing more new lows and new highs right now, but that is offset by the fact that sell side analysts are still having to revise their earning estimates higher, and when that's happening, the price usually doesn't stay down for long. And so it has been a very interesting thing to see over the past couple of weeks. Upside earnings revisions are at their highest level in over a year.
So in other words, if prices were to roll over a little bit, and they have a little bit, right? Has enough time passed that you would already start to see these downside revisions if they were going to be downside revisions?
I mean, it's not. I would expect them to be moving together, and right now you've got
a little lagging
revisions.
though. The sell side, it's a little lagging, no? Not by much, is what you're saying?
Not by much.
So,
and the
weeks
pattern
and a month is enough time to see those changes.
Yeah, I think you should see them move together. And this isn't like a day for day, tick for tick, but the overall trend is still higher in earnings revisions, and that's been and so that, I mean, let's not overthink it. Over time, that they should move in the same direction, and what we've seen over off of basically last year's lows, that trend in earnings revisions has been moving higher, and it's still moving higher.
All right, Willie, always a pleasure, man. Thanks a lot.
Yep,
Why don't
thanks
you
a lot,
tell the
guys.
folks where they can reach you, Willie? Tell the folks where they can find you.
High Mount Research, highmountresearch.com, out at High Mount Research, at Willie Delwiche. Look me up on LinkedIn as well.
Yeah, the link to his site and Twitter are both in the description of this video, and I'll drop a link in the chat. Have a
You're
good
the man,
one.
Willie. Come back soon. This is good.
Yep,
I love
yep.
this.
Yep. See you guys. Have a good one.
Adios.
All right.
We could do that. We could do that with Willie all day.
Yeah.
We could just spend all day talking to Willie.
We definitely can.
We didn't even really get to discuss the new sentiment environment.
We did a little bit. We touched on sentiment. We touched on sell side analyst sentiment. We talked about you talked about the bond sentiment. We got there.
Willie has a
Right.
breadth of sentiment data that he's looking at on a regular basis. Probably more than that.
I like it.
All right, let's bring Kimmy on here. She had some good ones yesterday. Some good trades. Let's see what she's watching.
Kimmy.
Hey guys.
Kimmy's Moderna, Kimmy. That's what I want to talk to you about. Moderna. Nice trade.
I was in that from last week.
I know. Nice trade in that, because I was mentioning that before the show. It's had a good couple of weeks here, and you benefited.
Kimmy Sokoloff. Great example of that mean reversion strategy.
Yeah.
Working in, we do a lot of trend following stuff, and Kimmy on a shorter term basis, mean reverting, nailed it again. Nice trade, Kimmy.
Thank you. It was good. I added to it because I bought it higher, and I added to it around the 100 level. I told people in the room that they could add to it. It's very hard to say to add to a name. It is hard. At the same time, but I'm long Target's not doing so well. I got the new lows, but we'll see how that goes.
Or listen, Kimmy,
We'll see how that is.
4 for 4 yesterday. Nothing to sneeze at. Moderna, Tesla, Nvidia, Goldman Sachs. 4 for 4 on the winners. I am very, very interested in this McDonald's trade that you're looking at this morning.
Well, so yesterday I recommended it in the room below that 179.80 level, and it did drop. I said if anyone wanted to take it, I'm looking for, if it could stay below that level again, I'm looking for a little lower, like, is it in the 100 level? Yeah, 176. 176.
Hold on. We're talking about McDonald's?
I mean, 276.
Yeah,
Sorry.
I was going to say.
Oh my gosh. Yeah.
You have
I'm
issues
like,
with your
yeah.
y-axis too. I do too, Kimmy. People, the
I'm
normies
like
don't
100,
understand
200. I can't even keep like what all these stocks, like
That's
what
right.
level they're at anymore.
It doesn't matter. It doesn't matter. That's why.
Right. Are they in the 200 level, 100
That's
level?
right.
So I'm in 279.80, stays below that, looking for 276.50 or so. It did drop, went down. It did break below. I said, anyone interested in it? And it did drop down to like 278.50 or so yesterday. So we'll see if it goes there again. Yesterday morning I put in my note that the SPYs have potential go to 441. That was yesterday morning. We are here. So we dropped down yesterday. I said, guys, let's be careful in case they keep slamming it lower in the SPYs, but they reverted it, held the 435 level and reversed back up. Now we're at 441. We are at a resistance level. That's roughly like the 8-day moving average. So let's see if they push it through, head to 444 or contract some.
I'm not good with my economic calendars, but I did see in your morning note that this Powell guy is talking again. Seems like he talks too much, but is that
Friday? Friday. We gotta wait till Friday, so we have all week. So Friday.
Jackson Hole, JC, come on.
Jackson Hole.
Let me tell you something. I think we should all go to Jackson Hole, but as long as those economists aren't there, right? The rest we can go hiking. I just don't want to hang out with economists, man.
So
parents out there, don't let your kids become economists.
So we'll see. Baidu had earnings. We'll see how it goes today. I don't love trading day of earnings. Dix is getting slammed today, so we'll see how that goes. MSTR.
Are you looking to pick up some Dix this morning?
I might be. I'm going to give it a little bit. We'll
Very
see.
Kimmy trade.
Yeah, I was going to say.
Earnings trades are harder. If it was, a downgrade, that's different. Earnings trades are harder. Sometimes it works, sometimes it doesn't, or I capture at the wrong point and then it goes. So we have to see. We'll see. I'm watching Microsoft, PayPal, just some names.
Watching Nvidia?
Watching
yesterday,
Alibaba?
traded yesterday, recommended in the room that could go Alibaba, that could go to 460. Yeah. It's now like at 480, the new high. So, I mean, that name, let's hope it does well for earnings tomorrow night. The way
Nvidia earnings are tomorrow night. So this 8.5% there yesterday had nothing to do with earnings.
Well,
it's the run up. They're running it up. I don't know if it's buy the news, sell. Is it where they say like buy the news, sell the rumor, or
buy the rumor, sell the news.
Buy the rumor, sell the news. It could be something like that to that aspect. But hey, people love Nvidia. Watch it be in the 500 level. But we'll see what goes on.
Yep. All right, guys, if you want to join Kimmy's Dream, trade with her every single day. The link is on the bottom of the screen. I'll also drop it in the chat. And you know what? Just for fun, we'll throw up a QR code because QR codes are cool. So there's the QR code.
Go into Kimmy's room. You're not going to have JC interrupting her. It's great. It's a lovely experience.
Okay.
Lovely for all. All right.
Bye, guys.
Have a good one, Kimmy.
Good job, Kimmy.
Bye, guys. Have a good
one. Yeah.
Yesterday, Spencer.
As far as Nvidia yesterday, pick whatever's on your bingo card, right? You want to say it was the relevant to earnings? Sure. You want to say it was due to this massive price target raise from HSBC? Sure, right? Like
definitely wasn't that. That definitely wasn't that.
I know they raised their price target to like $800, something insane. So 720 maybe. I don't know. Anyway, okay. Speaking of earnings, we talked about Dick's Sporting Goods. Macy's getting cracked here this morning. They reported. Lowe's reported this morning.
There's no way Macy's has earnings.
Well, actually,
they don't make any money.
Actually, yeah, I think they do.
They just had earnings.
I think
how
they
are
do.
How do they still exist?
Slow death for these retailers, man.
Oh, who goes to Macy's? Oh,
you remember how long it took Sears to go out of business?
Like a decade. Yeah.
Like,
True.
we knew that they were going out of business like 10 years.
But didn't Sears own all that real estate or something? Does Macy's own the real estate? I'm thinking no.
That's always been the argument.
I'm sure they own some.
Yeah.
You think?
I will say it's very hard to overcome personal biases and experiences. I worked at Macy's for a brief moment in time.
Did you?
And yeah, man. And it
Where? In New Jersey or in the city?
in New Jersey, in my hometown. I was in receiving, which is where they throw all the people who they don't want talking to customers, which is me. And man, this was a decade ago, and it was sad then, right? So I can't imagine what it's like today. Lowe's also reported their report was much better. Although their sales number did come in a smidge below, but they reaffirmed their guidance outlook for the year. So I haven't seen what that stock is doing. I'm sure it's
Up. It's up a little bit. It's up a couple percent.
There you go. And then the other one was Zoom. ZM. Earnings going in the right direction. That's the good news here, right? EPS beat, sales beat, and quarter over quarter, year over year, numbers are continuing to go up, which you want to see. They did reaffirm their guidance as well, but the stock is just an absolute mess. So
I got stopped out of this one quick. I started giving it a shot. This is like, what do you think, 3-4 weeks ago or so, if I remember. I got stopped out of this one real quick.
Yeah,
it's still there, man. Listen, we're right back to the IPO lows in Zoom. I mean, there could be something there. I'm not in it, but worth keeping an eye on, especially now after earnings, right?
Yep. Yeah. I mean, just fundamentally speaking, they're trending upward, right? Down from a massive peak, but now they've appeared to have bottomed. And
yeah, maybe fundamentally they might be trending upward, but the reality of the matter is, which is price, which is the only thing that actually matters. We're down at the lowest levels that it's ever been in history.
No arguments there.
It's still a huge piece of shit.
So, speaking of earnings, can we talk about Toll Brothers quick?
Yes.
In the chat. So chart 11.
Sure.
Listen, it was a question about, I don't know, maybe pull it up, Spencer, whether or not you should buy Toll Brothers ahead of earnings. I think it's later this week or even tomorrow. What I would do in this situation, typically, where you have a group of very similar companies who should all come out and report around the same time, how are their peers doing, right? Go look at all the home builders. Are they beating and the stock's moving higher, or are they missing and the stock's moving lower? Back in June and July, a couple of them, I don't know if they beat or missed, but the reaction was lower, right? And that led to a violation of the 2021 highs in many cases for these home builders. Some are holding, right? But I would be a little bit wary of getting into this before the report, because I think these stocks are vulnerable here at these old highs, right? You don't want to be in a situation where you're in this stock and it's collapsing below those, I think it was late 2021 highs. So I would wait and be patient on this. I don't think you're getting a great read from the group. Usually you could go and look and say, is DR Horton beating? Is Lennar beating? Is NDR beating? Okay, they are. Toll probably beats. It doesn't look like that kind of a situation to me right now for home building.
And again, it's not even just about the beat or the miss. It's about what do the stock do, which is why, frankly, I stopped paying attention to those fact set earnings reports, like earnings summaries, right, where they like give the the consensus estimates and look at the quarter over quarter and that stuff, because and how percentage of beats and misses, because it tells me nothing, frankly.
No, and this leads right into our next point about the NVIDIA note yesterday, right? So if you're going to be a fundamental analyst and trade earnings correct, you have to get two things right. Not whether or not only do you have to forecast what their numbers are going to be, what their revenues and the earnings are going to look like, right? But then you also have to forecast exactly what the street is pricing it. And I'm not talking about the Wall Street estimates, because oftentimes they're very wrong. If you ever see a stock come out and beat earnings, look like a great report, but then the stock sells off, a lot of times it's because the estimates simply weren't where they needed to be, right? So you have to determine what are the numbers going to be, and then also what exactly is the street thinking the numbers are going to be. With NVIDIA right now, these analysts have no idea, and I really appreciate the way Mike Wilson went about it. Can we read this? Can I just read this out loud?
Yeah, sure. I brought up on the screen. Sure. Why don't you read it?
Who is that?
All right. Just just hear me out. While limited in downside magnitude, the recent price action is a change and suggests stocks may be starting to question the sustainability of the economic resiliency, blah, 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 blah. Large cap growth stocks have carried the S&P 500 performance this year and have had good earnings amid cost-cutting efforts. Two standouts are Tesla and NVIDIA. All told, this mega cap cohort has delivered stronger than anticipated earnings and has been rewarded handsomely. However, since reporting second quarter results, most of these stocks are down, some significantly. He's talking about the reactions now, right, and the price action. NVIDIA will be a big test this week, and the price action may be more important than the actual results and guidance, in our view. While our analyst, Joe Moore, is bullish on the company results and stock going into the earnings release, we're of the broader view that strong results would likely not have the same positive effect on the overall market that they had last quarter, given the broader set of mega caps aren't benefiting like NVIDIA is in the near term. In other words, the companies that went up in sympathy to NVIDIA the last 2 quarters aren't currently making money off of AI. NVIDIA has real numbers. They're selling AI products, right? The other companies, this is just total hype that they're moving on. Recent price action seems to support this view. In other words, we don't think outstanding results from NVIDIA will change the complexion of the more recent price action for the other derivative plays or for the broader market in the way it did in May. In other words, a lot of this good news is very much baked in the cake, and we're not seeing that same momentum that we were seeing earlier in the year about this AI good news as it continues to hit the wire. So this is, an analyst coming out and saying, look, we don't know where this thing is going to come down, what these results are going to be. We don't know where the street really is on these results. So we're watching the reaction more than the actual results to kind of try to gauge where the street even thinks we're coming in. And on top of it all, things are really frothy right now. And we've already priced in some extraordinary gains, particularly for companies that might be 2, 3, 4 years out from, earning any money off of this AI craze. So I think this is a great and honest report.
The way I see it, it's kind of like there's only 4 options here, right? Either they come out with a good report and the stock goes up, good report and the stock goes down, bad report. Actually, really 3 options, or a bad report and the stock gets hammered, right? That's it. It's one of those 3 things. I think.
Listen, it's going to be a wild ride for this stuff for years to come. I think what this note really is a fundamental analyst coming out and saying, hey guys, it's a lot easier to be a technician on this one, right? Because when there's so much uncertainty around results, around expectations of results, he's just saying, look, we're looking at the price action to kind of gauge where the market's still at on this.
I have a question. What's the straddle at in NVIDIA right now?
No idea.
It's too expensive.
Yeah, no kidding. I'm just what I'm wondering.
I don't even need to look. It's too expensive. I just want to know. I just want to know. I want to go to the hot corner, but I did want to mention something. Jerry Carey talking about how tech has carried the indexes for the last 2 decades. Jerry Carey, I would check my math. Spencer, if you want to throw up slide 3 there, technology was holding the indexes back for most of that period that you're describing there. So keep that in mind. After the tech bubble peaked, it took technology a long time, 14 years to get going. So this is tech relative to the S&P from 2000 to 2013. So Jerry, not only did tech not carry the S&P, it was actually holding it back.
Okay,
from the exact opposite.
Jerry's point was, I think, from 2010, 11 onward, right?
Show the rest of the chart. Give me a break. What is this shit? Show the rest of the chart. Because it's a straight line higher as soon as you move out on the right.
Hey, fine, but that's the last decade, not the last 2 decades.
All right.
Am I just being a ball buster now?
You're both right. Yes.
Yeah, a little bit.
All right. Can we throw in the hot corner? Because we got some action. My man is dropping 38 million on the ET.
Sure.
Hot corner. So hot right
now. All right. Can we talk about $38 million? Granted. Mr. Warren here is worth $5 billion. There's that black screen of death that Spencer loves so much. This is the my man. Listen,
Kelsey Warren.
Kelsey Warren, executive chairman of Energy Transfer ET, pays almost a 10% yield, by the way, because it's one of those pipeline things, midstream as they call them now. $39 million, not a piker purchase, not a furthest thing from it. But my dude is worth $5 billion. So yeah, I don't know how much of that is liquid. But regardless of how rich he is, 38 million is still 38 million, Strazza, no?
He's one of those oil and gas tycoons like Harold Hamm, I guess Aubrey McClendon of yesteryears.
Rest in peace, Aubrey.
Yep, founder and CEO. Who was the guy from? Yeah, Harold Hamm was Continental Resources. We saw something similar where Hamm was just adding to his position in Continental Resources nonstop earlier last year, right before they got taken out or taken private. So Kelsey Warren, like you said, JC, has got a lot of money. So 38 million, believe it or not, is not a huge deal for this man. But nonetheless, it definitely catches our attention to see somebody come out, put this much money on the line in the open market. I think it's something like ET, and I didn't bring the chart along. I'm sorry, but it reminds me of like Williams Bros, which we discussed.
Can you throw up slide 1 there, Spencer?
I can do that.
There it is. Yeah. Look, this thing's getting tight up here. If you fibbed it out from the 2018 or 2017 highs, it's running right into the 62%
I
right
love
here.
when he uses Fibonacci as a verb. I really do like it. I really get excited when you do that, Strazza.
You got to fib it sometimes.
I'm into it.
What was that thing like? Crank it, whip it, pop it.
No, bop it.
Bop it. Yeah. Fib it. No?
Yeah.
JC, you didn't bop it?
I have no idea what you're talking about.
You didn't crank it?
No. I believe it is whip it good. I think that's the one I know. I don't know anything about bopping.
Whip it.
So hold on.
Toys
So
of
this is
yesteryear.
ET. This is ET price only. But let's remember that it pays a 10% yield. So why don't you throw the total return up there? Because it looks a hell of a lot better when you start including these when you start including the dividends that it's paying out, which I'm pretty sure is what Mr. Warren is seeing here, right, Strazza? He's looking at this.
Listen, when we talk about companies that pay high yields and say stay away, the MLPs are different. They're like REITs. Like this is the business they're in.
This is what they do.
Right. They have astronomically high yields. These are like very, very high cash flowing businesses. And I guess it makes sense for them. Granted, this has been a historically terrible group to invest in my whole career. JC, has it ever been different? These pipeline operators.
Yeah, early in my career,
Really?
during an energy bull market when technology was struggling.
So maybe we get there. They have been the clear laggards already this cycle. So we're seeing a lot of interest in these names, whether it's options activity. Like I said, we just covered one yesterday in our options scan on the Flow Show. We're seeing a lot of insider activity. This isn't the first MLP name to pop up on the hot list recently. Maybe we're in an environment where energy makes a new leg higher and we see new leadership emerge beneath the surface in this sector. And it's not the E&Ps and it's not the oil field services, but it's instead these pipeline operators. I think we need to be prepared for, a situation where that happens. Crack is a good way to play it. That's the ETF with refiners. And then there's also MLP ETF, which is going to give you specifically just the MLPs, which I like the Alarian one, AMLP. But Energy Transfer, I think, is the biggest name in the space.
You know that Crack pays a 7% yield?
Dude, okay. So this is crazy.
Wow.
I was just looking, just like Willie was saying, like
The problem is it doesn't trade. For the record, nobody could buy it. So there's that.
Some of these cyclical commodity businesses, when it's a boom cycle, I mean, they are just throwing off cash like crazy. I don't think this is real, but I was just looking at the shippers ETF. See, what do you guys think the yield is on? This is an ETF. Cargo shippers.
They brought it back?
No, they launched a new one, different folks.
It's 16% I'm seeing here.
Is that crazy?
It is crazy. It is crazy.
So,
but you can't
not get that.
And this is a good example of why we look at these things. So C probably doesn't trade if I had to guess. Yep, it averages 5,000 shares. So it doesn't trade. Crack, CRAK, is the refining, doesn't trade either. So in these situations, you like to look at them. You go to the holdings of the ETF, and then you're going to see the stocks. And those are tradable. Those are liquid. So just because these ETFs don't trade and they're illiquid and we can't touch them because they don't trade, they're literally super. they still add value. We almost treat them like an index. A lot of these indexes you can't trade unless there's an ETF that tracks the index. So think of it like an index, and then you look at the components. So they do add value to the process. So I just want to reiterate that.
Yeah, great information, right?
Great information. Any other any other trades? A lot of Piker purchases. Look at these Piker. More regional banks.
Listen,
Capital Bank shares.
Lennar really stands out. I know you don't like it because it's not big enough for you.
100 grand. Amy Bance. Come on, Amy. That's all you got? 100 grand? What are you doing with that?
She's one of those career directors at this point. I'll bet she had a background in like Big Four or something, an accounting background, but she serves on a lot of boards, and she's out there buying stock in this one company, not the other companies whose board she serves on. Stands out to me.
100 grand, Amy. Come on. She's got a net worth of, she's only got a net worth of $2.5 million. So, all right, I'll give it to you, Amy.
No one
that's
knows.
Not a Piker purchase.
All right, here's what I'm talking about. This woman probably worked in the Big Four, was a CFO at some company. Now she's retired. She serves on a couple boards. No one knows her financial situation. Where does this $2.5 million come from?
Google, Dr. Google. Okay, but listen, 2 seconds of homework. 2 seconds of homework. She doesn't have a $5 billion net worth like Mr. Warren over there.
But right? It could be 10 million.
In fact, you can argue, Strazza, you can argue that this is a bigger purchase for Amy than it is for my man Warren, because if it was if the guy's worth $5 billion, he just dropped 38 million.
Yeah.
Like, are you kidding me? That would be the equivalent if you match up the net worths. That ends up being a $19,000 transaction for Mr. Warren, right? So the fact that Amy is dropping a hundo, honestly, that's a bigger purchase. It's a bigger percentage of her net worth. That's what that means to me.
All right, real quick, and I agree with you. It is. That one stands out more to me than any, except for one, which we'll get to in a second. But first, chart
for
one.
Somebody who doesn't like Lennar, I mean, I thought I made some pretty good points there.
I like it. Listen, if you're looking for a way to play these MLPs, I think this is a really clean chart. Look at this chart one. AML.
Adam says it best. Adam Evans. It's not everything, but it's something. It's worth taking a closer look at the stock, right? That's all that means.
Maybe. Listen, throw up AMLP. About 40 and change, call it 42 here. This is a clean chart. You could buy this little range breakout here. I like when you're buying stocks like these, they all have their own little issues. They might be working on new pipelines or projects. One maybe messes up. You don't want to pick the wrong one with these commodity stocks. Just buy the basket. I think AMLP gets you there pretty good, maybe 2% less yield than something like ET, but you're diversified, right? You get a nice mix.
But that ET looks way better.
Does it? I don't know.
Yeah.
All right. So one more that we absolutely have to talk about. I was hoping to get to uranium today. Might as well do it here. Throw back up the list quick, Spencer. BWX Technologies. Now, this company has really piqued my interest lately. I've been stalking this one. Love to see the big buy on here. Robert Nardelli. Maybe it's not a big buy according to JC. 140 grand. He's going to go check how much this man is apparently worth. And we'll try to do some sort of materiality analysis here. But the fact remains that this chart is incredible. BWXT chart is on Spencer's slide 21. Look at this thing. When you zoom out, oh my God. Do you know what these guys do? Who wants to take a guess? 1.3% yield, $6.5 billion.
This guy's not worth much. Oh no, he's worth $1 billion. He is worth a decent amount.
This is
uranium. He's worth $1 billion, and he invested 100 grand. I can't take you seriously.
Okay, listen. This is nuts and bolts for uranium. BWX Technologies engages in the supply and provision of nuclear components and products, operates through the government operations and commercial operations segment, manufactures naval nuclear reactors, including the related nuclear fuel for the U.S. Naval Nuclear Propulsion Program, commercial operations, commercial nuclear steam generators, nuclear fuel handling systems, pressure vessels. You get the idea, right? These guys are very much going to be involved if there's some sort of a new bull market for nuclear or uranium, right? They're selling all the components and parts. The chart is already breaking out, looks far better than any uranium chart you could find. You look at something like CCJ or NLR, which we have here, Spencer, in 18 and 20. Those are good options, right, to invest in a uranium bull market. but why not buy this BWXT? You know what this one reminds me of, JC? Something like TPL, like Texas Pacific Land and Energy.
Remember that?
Or even like LNG, where you're looking at it and you're like, wait, these are energy stocks, but boy, they look a lot different than their peers. And then you look under the hood and, okay, they do something very, very different.
They are very different. That's why they look different. The market's treating them differently because they are.
These guys aren't out here risking, owning and operating nuclear plants. We all know what a risky game that could be. Right?
Oh, we know it all too well around here.
They're simply selling the nuts and bolts. And if this nuclear thing is going to be as big as a lot of smart people think it is, why not own the company that's going to profit from all these new plants that are being made?
All right.
So tell the folks where they can get it.
Yeah, that was the hot corner. First off, I want to say you can access the hot corner on our new website. You should go there, stockmarketmedia.com. That's the first thing I would say. Second thing I would say is if you want the actual daily note, if you're too lazy to go to a website and you want us to deliver it to you, we do send it out every single morning at like 7 a.m. or thereabouts every single day. So that's where I look at it at least. Email us. I'll put the email on the screen. Questions at stockmarketmedia.com. Put a hot corner in the name and we'll get you on the list for that.
Great email every morning. I mean, just give 2 seconds. What are the biggest purchases from the prior day? That's all we need to know. Like, we justify it and we talk about their net worth and how relevant it is. But at the end of the day, it's a list of stocks that we want to take a closer look at. See what they see or see what they think they see, right?
Yeah. All right. We got Pat here. You guys want to talk chart report?
Yeah, bring on Pat.
Right. Maybe if it's okay with you guys, I can finish talking about uranium before the end of the show.
Oh my God, this guy loves his. What do you love more, Vietnam or uranium? Are there any Vietnamese uranium stocks out there that we can buy?
Pat, hold on. Pat, did BWXT make the buzz or was that on? I think it was the
Request
buzz.
Live. It was on Chart Request Live. JC, we talk all the time about how our clients give us some of the best ideas, right?
Yeah.
Chart Request Live is so good because
It
they're
is.
speeding us tickers,
Yep.
and that's how I found this BWXT. I'm like, oh,
All right.
Yep.
now
That's right.
this name, so it's all coming together for this stock. You guys don't like this play? You don't like this?
We do. We've just been talking about it for half an hour. We're over it. Can we
I thought
move
you
on?
did.
Hold on. Let's get Pat on. I think
I
Pat,
like it.
Hold on.
I like it.
Let's go.
All right.
What's going on, fellas?
Oh, Pat, live from San Diego.
Live from San Diego.
Wait, Pat.
Too.
I was going to ask you, are you underwater yet?
No. You know what? It wasn't even it was like a rainy day in New York or something like that. I mean, it was nothing.
Pat calls me yesterday for hurricane advice. I go, when is it gonna hit? He goes, it already did, dude. Someone's not paying attention.
No, you just go eggs and milk, man. You got to buy the eggs and the bread. Bread, eggs, and milk, right?
What happened? Just a bunch of sensitive Southern Californians expecting the worst, and as usual, it's just another.
You know what? To be fair, I think the infrastructure here is just really fragile. The roads aren't designed for drainage and all that stuff. So.
It's because it never rains. It's like a town that gets too much snow that's not used to plowing.
Exactly. Yeah.
When the hurricane hit Lower Manhattan, remember a few years ago, it made a lot. Even though the hurricane wasn't that big of a deal, Lower Manhattan's just not built for that.
Yeah.
Oh, Sandy.
You talking about Sandy?
Remember that? They just had the clip of the.
That was a very
angling there,
man.
No, it was not a big storm at all.
So,
It wasn't a big storm. It's just that Lower Manhattan is not ready for any kind of a storm.
Whatever.
But no, it was not a big storm, Spencer.
Sandy?
I disagree.
No, it wasn't a big storm at all.
Not in Manhattan. Fairfield got rocked.
Fairfield, Brooklyn, all those coastals. Yeah.
So listen, travel update. Patrick has actually decided not to join me in Vietnam. Just wanted to throw that out there so that everyone is aware.
Yeah, because he knows how dangerous that's going to end up being for him. He wants to make it back alive.
Yeah.
Patrick is crushing it these days. He doesn't want to veer off, right?
Wait, Pat. Did BWXT make the buzz? Did I make that up?
It did. Yeah, I was gonna say we don't have to stop talking about uranium.
Thank you.
Here we go. Bring it back.
Yeah. So BWXT showed up on the buzz a few weeks ago. I mean, somebody in the chat said it best. I mean, no overhead supply there. It's just a beautiful looking chart. And I like Steve's fundamental take there. Uranium's really hot. I was just looking at URA. It's kind of dealing with that 23, 24 level there. That one's been a really strong one. Hasn't quite broken out yet, but it's working on it.
Chart
Can you throw up the latest buzz and explain to the folks what the buzz even is?
Wait, so Pat, did you outline like levels for BWXT?
Yep.
Yeah. Nice.
Yeah. I'd have to pull it up here, but yeah, that was a
Strazza,
really nice one. I think like 2 weeks
which
ago
chart
it
did you
started
want?
going up.
You want a 19? Is
Yeah,
that what you
the
want?
chart looks great, Pat.
What-
One thing real quick
This
before we
is-
go to the buzz report. Yeah. If you're looking for an ETF to play uranium, it's NLR, not URA. Just chart
Really?
against each other. Yeah. So I'm just
Never
going
even
back
heard of this.
2 years here. NLR is breaking out of its range, making new highs. Looks like some of the best names like CCJ. I would imagine there's a ton of CCJ in there. JC's looking up the holdings right now.
No,
URA.
you're not going to buy NL. Nobody can buy NLR. It doesn't trade. You can't buy these things.
I was gonna say, in what way is it better? Like, is it?
Yeah, URA. You can't buy NLR. You can't buy it.
There's no volume?
None. URA is the only one you could buy.
A
I'm seeing
whopping
30,
3,000 shares so far today.
Yeah, it doesn't trade, Strazza.
30,000 average.
You can't buy it.
That's nothing.
Let me get my calculator.
You
Yeah.
can't buy it.
I mean,
It averages 16,000 shares, bro. Come on. Can't
okay.
trade.
It's like maybe
nothing.
$1 million
No.
today.
Just to be clear,
Well
You-
below our
This
threshold.
thing has $70 million in assets. 70 million and zero might as well be the same thing. You can't trade it.
All right, so then look at the components in NLR because what they're doing
Right.
is working a lot better than URA. And I think there's a lot of opportunities beneath the surface. CCJ ripped higher, broke out yesterday. Chart looks so good if you want to throw that one up. And then there's smaller names like UEC, UUUU, Denison Mines, DNN. But there's a lot going on, especially if you're into your penny stocks and your micro caps and your small caps. These are high flyers. Go look beneath the surface in uranium. These stocks are red hot right now. And and you know this, JC. I think oil and gas, does bounce back. We get another leg higher from energy, but I think the coal plays and the uranium plays, like the ancillary energy plays, are really going to be where the juice is.
We got to get Adam Warder on the show so we
Yeah,
can
we
talk
do.
about these things. Get Adam Warder on the show, Spencer. Come on.
I don't even know who that is.
Yes,
Matt.
you do.
It's Matt.
Yes, you
Walker.
do. We
But-
hung out with him in Baltimore. You know Adam.
Matt.
He's hanging out with all those gold bugs. Remember all those?
Oh yeah, okay.
Canadians?
I do know who that is.
His name's
Okay.
Matt.
Yeah, but I don't know him. I don't know him though.
You know
like-
him. You know him enough.
All right,
He's good
I'll
at
do-
it.
whatever.
all right, let's talk about the buzz. Sorry, Pat.
Yeah, throw it up.
I got it. Yeah. This is the buzz from yesterday. So okay, briefly, and I don't want to spend too much time on this because this is a premium thing, a premium scan, and then we're just gonna dangle it here a little bit. So this is the table from yesterday that Pat sent out. Pat, why don't you briefly explain this, and then I'll explain where you can get it.
Yeah, so we're looking for what we call unusual social activity, and that's how we're quantifying that is really we're looking at a 1 week rate of change in the number of mentions of a specific ticker on social media. So if it's NVIDIA, right, how much it's getting mentioned in 1 week relative to its 2 month average, right, and that shows us what's buzzing, right? It shows us unusual social activity. Shows us that people are interested in it. You guys were talking about with the hot corner earlier. It kind of gets you, if they're looking at it, we want to know, we want to also be looking at it. So it's kind of a similar idea to that.
Yep, I'm gonna take it off screen now because again, this is something that people pay for, so we don't want to give too much away. I will say, if you are interested in getting the buzz, it is part of a larger thing that we call, or that Pat calls, Chart Report Private Access. And it's there's the buzz, there's the heat check, there's a few other things. It goes out every single Monday, right? Is that correct,
Sure.
Pat? Okay. If you want to get the buzz, I recommend, and I'm going to put it on the screen right now. Your best bet's probably to call Mary. So here, let me just.
Whatever in doubt, just call Mary.
Whenever in doubt, just call Mary. No, she'll answer
Love
all the questions for you. But I got a question for JC and Steve real quick. You guys ready? Where's
Yeah.
Steve? He just
He's here.
disappeared?
He's here.
So with and I kind of asked you this yesterday, Steve, but what do you guys make of the action in tech? I mean, it's been pretty strong given what yields are doing here. What do you guys make of that? So it was the strongest
Throw up the
sector
tech
last year,
chart, Spencer.
or
Throw
last
up the
week.
tech chart.
Yeah.
And it was the strongest yesterday. And you're getting follow through on yields. So, like, what does that say to you? Is tech saying something? Am I reading too much into it?
No.
Or is it just like an oversold bounce?
You know,
Throw up the chart.
I'm doing it.
it was never the move to throw tech out. We had a lot of buzz around like some hardcore rotation. But if you zoom out and you just look at XLK SPY, looks good.
Yeah, but when you look at XLK on an absolute basis, which is what pays anybody, we're stuck below the former cycle's highs. Last time we were here, tech stocks lost 40% of their value very quickly. So this is the first time that we're back. To expect all of a sudden magically that tech is just going to rip through that and pretend that what happened last time didn't happen, go ahead. But the bottom line is tech is doing the exact same thing that it did last time it was here, which is perfectly normal. It doesn't mean that tech needs to fall 40%, but it's perfectly normal for demand to continue to try to absorb this overhead supply. And we don't know how long it's going to take. Maybe it takes another week. Maybe it takes a month, a quarter. Maybe it takes years. I have no idea, but it hasn't done it yet. And I'm not gonna bet that it happens tomorrow. I got to see it, and I'm pretty sure I ain't gonna see it anytime soon.
If and when this corrective action stops, and God forbid Nvidia comes out and just knocks the socks off this earnings report tomorrow, this thing could be right back above those former highs, ripping higher, and at new highs on a relative basis too. So I don't want to write off tech. You just want to look at these former highs and say we got to be above there.
I got to see it, man. I got to see it. I don't trust nobody. I got to see it.
It can happen tomorrow. It can happen.
It can happen tomorrow. Absolutely. No question. I doubt it, but it can happen.
Can I talk about a young aristocrat stock that's really stood out this week?
Yes.
So if I was writing a young aristocrats post right now, throw up this golf chart. This is Acushnet. They make Titleist golf balls.
Acushnet?
Acushnet?
This guy and his golf.
No, so I mean, this is absolutely great. 2 days ago, Jefferies came out with a note. They recently had earnings. This is such a simple company. They literally, like 40% of their business is just selling golf balls. They're the golf balls that everybody wants.
Titleist.
Do what they're good at. Yeah. They sell the Pro Vs. This is like 40% of their sales, right? And they grow slowly. They're trading at, in the Jefferies note says, underappreciated the value of golf's best-in-class portfolio in a very healthy golf industry. Shares currently trade at 11 times EV/EBITDA. 5-year range for that is 8 to 15, so relatively cheap. Looking ahead, golf is poised to defend its number one share in golf balls and shoes and gain share in clubs while expanding margins steadily. Look at the chart. It looks great, right? Pressing to new highs on both absolute and relative terms. This is like exactly what we want in stocks that we're getting long. So the chart supports a bullish thesis here above 54. Now, if you go to the next chart, let's just look at it versus a competitor. This is against Callaway Topgolf. One moving down and to the right, the other one moving up and to the right. Callaway trades at like 35 times, like 2 or 3 times the valuation of Acushnet. They tried to do, a funky acquisition with this Topgolf.
I was going to say, I suspect that's why.
Also, 13% of their sales come from the region you want to be in. If you're selling golf things, you want to be in Asia. Trust me.
Here we go.
Only 13% of Callaway Topgolf sales comes from Asia. 30%, so more than double, Titleist sales come from Asia. If you want to invest in golf, it's Titleist all day. Acushnet, buy these new highs. You can define your risk perfectly right here at current levels. And there's nothing not bullish about this stock right now. I'll also just mention, since they came public about 6 or 7 years ago, started paying a dividend, have consistently raised it every year. And if you look under the hood at their earnings, I mean, they're going to be able to keep raising it indefinitely, just selling these golf balls. So it's a great business. I really like it. It's simple. And I think Callaway made a grave mistake with getting into this Topgolf business.
Is Acushnet actually a bet on people being bad at golf?
No,
because the worse you are, the more balls you lose, the more balls you have to buy to replace the ones you lost.
Spencer's not wrong, Strazza. He's not wrong.
You know what I mean?
Everybody's losing balls out there. It's a bet on golf gaining in popularity and growing around the world.
Yeah, but I'm pretty sure Strazza and I lose the most golf balls. You should have seen us two knuckleheads driving around those trees.
Really nice move yesterday too, Strazza. I mean, it just tested support there and just rocketed right off.
The Jefferies note.
Can you, Spencer, tell everybody where they can get the chart report? Give them the link, the free chart report, and then let's hit recess for a minute.
Yeah, doing 2 things at once here. Chart report. There's a link up on the screen. Okay, recess. Yeah, we got like a minute here to do that. I don't even have anything. So
I got a good one.
Hope you guys do.
Old Saybrook, highly recommend. They've got a resort there, the Saybrook Point Resort and Marina, right there on the water. Lovely. This
Connecticut.
eastern side of Connecticut, swung by on the way up to Mass, and had lobster and tuna, like a tuna, like one of those bowls with the soy sauce. It was lovely. We had oysters. We had all kinds of seafood stuff right on the water. Old Saybrook.
That New England seafood this time of year, man, it's as good as any.
I'm telling you.
So did you do any Merritt Parkway, or you were strictly like 95 to 91? And then
Funny you said that. I was telling my wife on the way down. She wasn't interested at all, by the way. But I was like, look, this is the Merritt Parkway. They don't allow trucks. You get on a sports car and you rip through it. Like, it's a really nice road. But no, we didn't get to that.
One of the most beautiful.
Where'd you go?
I went to Mass. My sister moved out to suburbs of Boston, just had a kid. So I went to go meet my niece. And then we swung by Old Saybrook on the way out, just to break it up, because I got 3 crazy kids screaming. It was lovely. I had never been to Old Saybrook.
I feel like all of New England is quaint. That's what New England is. It's just quaint.
On the water. It starts getting grimy as you get away from the water.
No, but that's the word for those towns up there, like mystic, like quaint. That's the word. Quaint.
Yeah.
But like a lot of Rhode Island, is not nice. You know what I mean?
Rhode Island is like an island ghetto, similar to where I live down here in the Florida Keys, but it's just so lovely. It's so
like Newport's nice, Providence has some nice areas, but like a lot of those areas are not nice. And then same thing like in Connecticut, like along the water is really nice, but as you start heading towards like Hartford, like there's nothing
true.
about
Hartford is it's true. It's
a lot of trailers on the water in Rhode Island. But
by the way, Tyler Van Dyke from Hartford, Connecticut. So shout out Tyler Van Dyke, quarterback for the Miami Hurricanes.
Actually, Glastonbury, but.
Real fast, I have a quick recess. Actually, it's not mine. Someone sent this to us, JC, with you in mind. I don't know if I'm sure you saw this by now because must be big in your world. But scientists have apparently created a way to match flowers with your wine. I'm sure you know all about this by now. So they're saying if you had, just like you match your wine with your meat. You should also match your wine with your flowers, and having certain flowers will enhance the wine that you drink.
Wait, what? Who's eating flowers?
No.
Oh,
you're not eating the flowers.
It makes sense because when you're blind tasting, like when you're doing sommelier stuff and you're blind tasting, flowers is one of them. Like you go down, it's called the deductive method, and you get to the flowers. You smell flowers. Are they old flowers? Are they fresh flowers? What kind of flowers? Like that's part of what you're smelling. This makes sense. I'm not going to do it, but it makes sense.
I pretty much always have a fresh bouquet of flowers in my house.
Really?
Yeah. It's good. It's good for the energy.
Wow.
Okay.
Yeah, always.
Okay.
All right. We're going to learn something today. All right.
Strazza showing his metroness a little bit there, right?
I love flowers.
Wait, Pat, did you have anything for recess?
I didn't. No, that went through me.
Yeah, all right. All right, that'll be a wrap for us. Thanks to our guests, Willie Delwiche, Kimmy, Sokoloff, and Pat Donawilla. Stay tuned. We got the chart report, CRL, coming to you live at 1 o'clock today. JC and I will be on for that. We have Twitter Spaces in like an hour and a half?
11:30.
So 11:30. We got that.
JC's making a special appearance on Twitter Spaces today. So
Yeah.
I am. What time?
Come by.
11:30.
11:30 at the chart report on Twitter.
I have a meeting.
At the chart report on Twitter. Stay tuned for that. Hey, drop us a like, hit the thumbs up, subscribe if you haven't already. Thank you very much, and I'll catch you guys later. Go make some money.
Adios.
All right, everybody.
Run it. I can't take no loss. I don't even know what it costs. I hit the